Remember that credit spreads widen for longer maturities, and that is an extra ingredient that is likely to keep that yield curve steeper over time. And you've got to have something that's inflation resistant in your equity portfolio. For us, we've been focused on infrastructure of late. Our ETF ticker TOLZ, as the owner of the infrastructure assets, is one path for that.
By the way, I just want to note right now, futures just turning red across the board right now, very fractionally lower, but red across the board. Doug, I want to come over to you. Same thesis, same idea here. If you were looking at a lot of potential for this one big, beautiful bill to pass the Senate, the tax cut would be part of it. We've heard a lot of industry leaders say that tax cut's going to be great for their businesses. Are there sectors that you're potentially more bullish on the idea that this bill is going to pass?
Yeah, I'm actually loving the rally here in Bitcoin and digital assets.
Bitcoin?
Yeah, absolutely. You see a lot more spending taking place with this bill. It's not really what people are looking for as far as increased prices and inflation. You're seeing the decoupling here out of that digital asset. It's on a rally. It's something I've been saying to watch for quite some time, and I think you should continue watching that.
I also want to take your take on the market action this week. So despite a lot of concerns about bond yields and everything else, we've kind of seen a flat market over the last 2 days. I want to play a soundbite from Mike Wilson from Morgan Stanley and just get your take on what he believes is kind of propping up the market right now.
Our math tells us that retail is buying about $5 billion a day, okay? CTAs and systematic strategies are buying about $5 billion a day, and corporates are now buying because earnings season is over. That's just a lot of money. And so, like, where's the, like this? If you get any selling, it just gets stopped up in the near term.
So, Simeon, I'm going to come over to you. Do you agree with the thesis? He also went on to say, if we see the market pull back about 5%, that dynamic changes very dramatically. And obviously, there's a number of risks. But I just want to get your take. Do you agree that's what's kind of propping up this market?
I think the underlying piece that's propping up the market is fundamentals. Profit margins are double what they were 20 years ago. That's the underlying foundation. And if tariffs come in where we're hoping they will come in, that's just a little bit of a real consumption tax that could be offset by the big bill. The challenge, of course, is that with just a little bit of perhaps a whiff of stagflation, those margins can be at risk. But we're clearly supported by fundamentals. It was a good earnings season, even though it's rearward looking. But quality is higher than it was 20 years ago.
Doug, what about you? Do you agree with this thesis? And also, again, I think it's important to point out, we didn't clip that part of it, but he says if the markets fall about 5%, this dynamic changes very dramatically, and maybe the momentum moves in a different way.
Yeah, I think taking a look at the year that was or the year that is, diversification for the win. You know, I think a lot of concentration has been on Mag 7 stocks and U.S. stocks over the last 2 years, if not a little bit longer. You take a look at developed international and emerging markets. If that's been lacking in your portfolio, you're not having the year that most diversified investors are having. You have some big returns year to date in the developed international space. So if you're just focusing on U.S. here and everything that's happening, I mean, you've white-knuckled volatility from January through April, but you're saving grace. International.
All right, so outside of mega cap tech, you like international, but let's get granular. Is there a certain, is it Europe? Is it the DAX perhaps? I mean, which area do you like the best?
We go broad, right? We're disciplined, diversified investors. I'm not going to take a specific sector or area, but you look to your passive investment, you look to, you know, the broad market there, and you're all right.
Simeon, I'm going to give you the last word very quickly. Outside of mega cap tech and large cap stocks, where are you looking for opportunities?
We mentioned infrastructure. And particularly the owners of infrastructure assets, not the cyclical guys that build it, but the owners. That's what we have in our ETF TOLZ. Also very important, don't forget about domestic mid-caps. They are the highest performing section of the equity markets for over 3 or 4 decades.
Really?
They were left behind by the mega caps. So if you're thinking about lightening up on mega caps, why stop at something like equal weight when you can just buy mid caps?